Okay, hello everybody. In these slides, I'm going to talk about an introduction to how wages and salaries get handled in the workplace. Two outcomes I've got here: to calculate gross and net pay in line with current legislation, and secondly, to complete currently used forms by HMRC in line with how to complete wages and salaries. Two outcomes, but one assessment for this class. They'll be assessed together. So first question then is, what is payroll and why do we need payroll? Well, payroll is needed to calculate how much employees are legally required to be paid, to calculate tax and national insurance that the employer has to pay and report to HMRC, to make accurate deductions from wages, and to make sure employees get paid the right amount. So there'll be some deductions from wages. First of all, how are employees paid? Can we think of different ways employees get paid? The most obvious one would be their wages, but there could be other ways employees get money from their employer as well. There could be bonuses or commissions. If they work overtime, then they could be entitled to more money. So if they're working maybe 40 hours a week, but they do 45 because the company's busy, there's high demand for the product, then sometimes they can get overtime. Antisocial payments, which are payments for times people usually don't work. So it could be payments for working maybe on Christmas Day or working during holidays. So these are all different ways that employers pay employees. Another way they can get paid is with perks or benefits, I've said here, in kind. So instead of receiving cash, some employees, if they do a good job, they're quite senior, they might get a company car. A company car also counts as a wage and it's subject to taxation too. Two big distinction here is between gross pay and net pay. Gross pay is the amount received before any deductions are taken, and the net amount's what's left after deductions. So if gross pay was 1,000 and there were £300 worth of deductions, net pay would obviously be £700 because that's what's left after the deductions. Question then is, what deductions are taken from gross pay? Can we think of any deductions that might be taken from gross pay? Maybe you could have paused the video. Can you think of 4 deductions from gross pay? Quote from Benjamin Franklin: nothing can be said certain in life except death and taxes. So obviously one deduction from gross pay is tax. Tax comes off that people have to pay if they earn over a certain amount. As well as taxation, people have to pay something else in the UK called national insurance, which is similar to a tax in that the more you earn, the more national insurance you have to pay. Other deductions can be pension contributions, trade union membership fees, donations to charities. It can also be earnings arrestments. So if a summary warrant's issued for someone, if they've not paid council tax, then their wages can be arrested, which means before the employer pays the employee, some of their wages is deducted and they're legally required to send it to a debt collector who can then pass it on to the person that the employee owes money to. The 4 we're going to look at in this class are income tax, national insurance, pension contributions, and trade union membership fees. Another big one that comes out of people's wages these days is student loan repayments. Two different categories of deductions: statutory deductions and non-statutory deductions. A statutory deduction is something that must be deducted by statute, in other words, by the law. So you've got no choice in paying these. Income tax, national insurance, and student loan repayments are statutory. Non-statutory deductions are things that are not required to be deducted, but people might ask for them to be deducted, but they can choose not to have them taken out their salary. So that could be charitable donations or trade union fees or pension contributions. Obviously, if someone is working in payroll, they'll learn lots of very personal information about employees, about how much they're paid, about personal circumstances around them. So in alignment with general data protection regulation, it's obviously very important that all the information about staff is kept confidential. If we look at the UK tax system in regards wages, The tax system runs from the 6th of April one year to the 5th of April the next. So for the year, the tax year we're currently in is 2020, 2021. The tax year began in the 6th of April 2020, and the last day will be the 5th of April 2021. So we're nearing the end of the tax year just now. There's different tax bands in the UK. So in 2017, 2018, if you earned £11,500, then you didn't have to pay any tax because the first £11,500 is tax-free. That's called the personal allowance. So if you earn the first £11,500 someone earns in the UK, they pay no tax on. If they earn between £11,500 up to £45,000, they pay tax at a rate of 20%. If they earn over £45,000, they pay at 40%, and the additional rate if they're in the happy position of earning over 150k, they pay 45% tax. Notice this was for 2017, 2018. The tax bands gradually get pushed up each year in line with inflation. So it was 11,500. 2018, 2019, the personal allowance was 11,850. By 2019-20, it was 12,500, and it's not changed this tax year. So the personal allowance today is £12,500. So the first £12,500 someone earns in the UK, they pay no tax. Then they pay 20% up to 50,000. When they earn over 50,000, they start paying 40%, and over 150,000, they pay 45%. So let's take this example here. Let's assume somebody earns £100,000. The question is, how much would that person pay in tax? So you might think if the person's earning £100,000 and the tax rate's 40%, they'll pay £40,000 in tax. That might sound like what would happen, but it's not exactly what happens. What happens is that for the first £12,500, they pay no tax. Then they pay 20% for the next £37,500. So if someone was to earn £13,500, they're £500 above the personal allowance. So they would pay 20% on the £500. So they would pay £100 in tax that year. So 20% in the amount between the bands, for the basic rate, then 40% in the next 50,000, which would be 20,000. So this person would pay 7,500 plus 20,000, which would be 27,500. You can see this example here. You pay 0% in the first 12,500, then 20% in the next 37,500, which is where the next band is. Then when you earn over 50, you start paying at 40%. So of the next £50,000, they pay 40% of 50,000, which is 20,000, which is where we get the 27,500 from. People wrongly think a 40% rate means it's 40% for all your income. It's just 40% for the amount you earn over that particular threshold. Scotland's got a more complicated system where there's quite a lot more tax bands. So in 2019-20, there was the personal allowance at 0, then a starter rate at 19%, a basic rate at 20, an intermediate rate of 21, a high rate at 41, and a top rate of 46. The net consequence is this: if you earn less than £20,000, you pay slightly less tax in Scotland, and if you earn over 50, you pay slightly more. But again, it's very, very slight. Things that people need to pay income tax on. So that's how much you have to pay. What do you have to pay it on? Could be wages for your labour, for your income. Interest and savings can be subject to income tax. Rent from property, so if you're a landlord, that's subject to tax. Dividends on some shares. Also, some welfare benefits will be taxable, like job seekers allowance and the state pension. Another thing you get in the UK is a tax code. So all employees will be given a tax code by HMRC, which is made up of numbers and letters. So the most common one in Scotland is S1250L. If you look at what the letters and numbers stand for, the numbers tell us how much the person's personal allowance is if it's multiplied by 10. So the 1250 tells us if we times it by 10, the person's personal allowance will be 12,500. The S would just mean the person resides in Scotland. So S, person lives in Scotland, 1250, how much personal allowance the person's entitled to. And the letter L tells us about the person's personal tax circumstances. So L means they'll be entitled to the personal allowance. M means they would get the marriage allowance if 10% of their partner's personal allowance is transferred over. So someone can transfer over 10% of their salary, 10% of their personal allowance. So 10% of 12,500 would be 1,250. So that could get transferred over into their partner's personal allowance, which would rise then from 12,500 up into 13,000 and a bit, 13,250. My maths might be off there. Also Scottish tax code. So S is means the person's in Scotland. And the same thing here, there's the same letters meaning the same thing. BR, if the tax doesn't, if it ends not in L, if it ends in BR here, then that means all the person's income's taxed at the basic rate. So the person doesn't get the L, which is get the personal allowance. Everything they earns taxed at 20%. And that's usually if the person's got a second job. Last thing we want to know about is PAYE. So in the UK, wages are subject to the PAYE system, which stands for pay as you earn. It's a way of paying income tax and national insurance, and it means as soon as employees earn money, they start paying tax on it. So even although you're entitled to the personal allowance of £12,500, you pay a little bit of tax and a little bit of national insurance each week. We don't wait to the end of the year, then send someone a bill through for tax, how much tax they have to pay. They pay a little bit every time they get paid. And then the employer is responsible for sending that amount to HMRC, usually every month. This is an example of a typical payslip here. So a payslip should have key things on it. It would have the person's name, the date they got paid. So this is a weekly one. We'll have the person's tax code. We'll have the number of the tax week. In this case, it's 51. We can see it's just come to the end of the tax year, which we know there'll be one more week in this tax year, which ends on the 5th of April. We see how much the person was paid, the gross pay, which in this case was 598. Then we see the deductions here, which are for income tax, national insurance, pensions. The total deductions are 147.20. So to get the person's net pay, how much is actually going to go into the person's bank account will be the 598 that they earned, take away the deductions of 147.20, which gives us a net pay of £450.80. We can also see the total amount of gross pay. So the total amount the person has been paid by the employee, by the employer over the year is £26,078. Total amount of tax the person has paid over the year, just over £2,500. And the total amount the employee has paid in national insurance is also just over £2,000. So these are the totals for the tax year, which means from the 6th of April, in this case 2019, up until the 28th of March 2020, that's the total the employees earned, the gross pay, how much tax they've paid, and how much national insurance they've paid. YTD means year to date. So that's the year to date amounts the employee has paid. So in summary then, payroll is really important. It's needed to ensure that employees get paid the right amount, and all workers are entitled to a payslip, something like this, that will show them how much they were paid and how much they have to witness getting deducted from their wages.